Hey guys, Rajiv here from Financial Hub India. So today is 19th of March 2019, and I'm going to trade and a lesson with you for you people. So we have a transformation kind of going on in the market right now. Now this is the chart I have shared yesterday in the free channel. So the description link will have this channel joining link, so you can come in there for the live market update. Now let's talk about this. This is the Nifty chart, and in Nifty chart right now, what I'm seeing is there is a transformation happening in the price action order flows from a non-volatile structure to a volatile structure. Now, why this is important? Because in both the structure, we see some different emotions playing in different order flows coming inside the market. The market is full of buyers and the sellers, right? So, does it make sense to see the difference when there are buyers and sellers both attacking the market, and there is another scenario where there is only buyers or only sellers is attacking the market, right? So if you want to buy something, for example, if you want to buy something, which kind of market structure or which kind of market situation you will prefer? A market situation where the buyers and sellers are equally powerful, or maybe the buyers are 100% and the sellers are 50 to 60%. The participation, in terms of participation in the market, the buyers are participating 100% and the sellers are participating 50 to 60% in the market. This is one structure. And the other structure is where the buyers are 100% and the sellers are 20, 30%, 10, 20%, and they can't dominate the market more than 10, 20%. Right, so there are two structure. One is, and this structure will remain in any kind of market in the world, because all the markets are built up with the buyers and the sellers, right? So if I want to buy something, for example, then I would like to prefer a market where the buyers are dominating. And if I want to sell a market, then I would prefer to trade a market where the sellers are dominating. Now, when you see the domination of the buyers or sellers or any one party, then that becomes a non-volatile market, because volatility comes from both the sides. Volatility builds up based on the buying as well as selling. All right, that's where the price goes volatile. So if that's not happening, it's a non-volatile market. Now this is an example of the non-volatile market structure here. See, so the buyers are powerful. You don't see much of the selling push. The swings are not big enough, and whenever the swings are coming in, prices again bouncing back up, even after the small pushes. So these are the non-volatile market structure basically, and the markets very easy to trade, very comfortable to trade, because one-way market, you don't need to even think about selling. So people who don't understand this non-volatility or volatility, they will be, because for them all the candles or the market structure is same, and that's a big mistake basically. When you think like, okay, I have a strategy, and that strategy will be applicable for any kind of market, because just because you made money with that strategy, because just because you made some money with that strategy in a particular type of market, you feel like that strategy will make money in all kind of market. That's a wrong way to look at it, and that's the reason basically yesterday I was writing this one. Keep your trades, direction, and analysis flexible as you see price action order flow transformations happening on charts. And if you don't understand the waves of the ocean, like when you run a ship, when you are a captain of the ship, basically he drives the ship's momentum, the ship's speed, and everything. Sometimes the it's not like all the time the ship is going in its full speed. Sometimes it's going in a slower speed. Sometimes it's going in a full speed. Sometimes maybe it's stopping somewhere. All right, and that's based on what? That's based on the waves coming in, the waves he's facing on his way, on the process, right? Based on the ocean waves, he decides when to run at its fullest, and how to do it, how to do it. Even though he has the same accelerator, he has the same brake, he has the same everything, the machineries are same, the ship remains similar, but how to drive that ship will be differing based on what kind of ocean, what kind of waves structure he is facing. All right. So like that, even though you have a good strategy, you have a good trading tool in your hand, but that depends where to use, how to use, when to use, based on what? Based on these order flows. And that's the beauty of price action. Because if you don't understand price action, no indicator is going to basically hint all these things to you in a logical way. No indicators. That's not possible. It may show you up, but in a very much lagging way. All right. So anyhow, coming back to this topic here, so we have a very much non-volatile top momentum moving here, and in such kind of non-volatile momentum, it's very easy to trade. It's very easy to make money because you just need to take trade towards the upside. All right, and based on whatever strategy you are going for, and your entry level should be correct, obviously. And now, what transformation we are seeing is that after such kind of bull momentum, we don't see much selling pressure coming in anywhere. Basically, this is the corrective swing in terms of the profit booking kind of scenarios. And if you have gone through the last two videos on the market updates, then I talked about this, because this thing is coming, how you understand somehow that is the price breaking through the previous higher high, not sustaining the previous higher high. Somehow this thing gives you an indication that, okay, the sellers, but this was not the case. If you just go back from here, go back down, the price was just flying. But suddenly when you see the order flow is showing you some kind of signs of exhaustion, some kind of signs of the, okay, each time it breaks the previous higher high, it's not really sustaining above the previous higher high, which shows the sellers are really coming in inside the market on a break of each high. All right, and then we got the next momentum up towards the side above this one. All right, so generally in terms of the order flows, when we see, even I talked about this in last two videos, we see this kind of stoppage, this kind of struggle by the buyers in such a strongly moving market after some time. This doesn't happen obviously in the initial stages, but when the market is a bit over exhausted, then these are the signs it starts showing up before it changes its behavior. Now, what is the behavior going on is a non-volatile momentum behavior going on, one where the buyers are getting the momentum, the buyers are overall ruling the market. And then this struggle shows that, okay, now the buyers are really facing some kind of selling pressure. They're not as flexible to move up as it was happening so far. So this is where we have been talking about, you're not really looking for some kind of break and go for it, like breakout trades. Generally these kind of markets are good for the breakout trades, but when you see these signs, the price is not really sustaining, falling and struggling, then that's not the right time to look for the breakout trades. One of the hint when you're not supposed to look for breakout trades. And then we talked about that, okay, you're looking for the price to break through this key layer and show us some different nature, the other than what's happening in here. And that's what really happened in here in this momentum. We see that, okay, the price now got a full hand towards upside, and it has now come out of this struggling nature. All right, now again, after these things, the price goes non-volatile. It resumes its non-volatile momentum till the time it made this bounce back here. Because this is the first time you can see the sellers are coming inside the market, because this is a black candle. This is the first black candle, huge sell-off you see in this overall momentum. So does it make some news for us or no? Because so far, for so many days, we don't see the price is attacking the market towards downside in any way. But for the first time, we can see, okay, zip. All right, so like I said, after such kind of non-volatile momentum, though, where the prices was flying, you had the first order flow behavioral changes started over here in these areas where the price was struggling to break through the previous highs. So don't you think this is another behavioral change over here in the overall order flows? Like this one, what I discussed, and this is the another one. So this order flows where here the price was not sustaining above the previous high, not sustaining above the previous high, not sustaining above the previous high, even though the uptrend was intact. Price was making higher lows, higher lows, higher lows, higher lows, higher lows. Everything was good. So in terms of higher lows, in terms of pattern and structure, everything was good. It's still it's a bull market. It's absolutely fine market. But the only thing is we started seeing a struggle over here. So that was a change of order flow. Now this is another change of order flow, because for the first time you can see the selling pressure. Here you don't see the selling pressure. You see the difference here. You don't see the selling pressure here. We see the struggle of the buyers. All right, but here we don't see a struggle. We see the sellers are now zip directly back into the market. The sellers, the entry, the selling pressure, the sellers welcome entry over here. We can see that, even though the scenarios towards higher lows remain same. We don't change the trend so far. The trend order flow remains same, but there are something different. But there are some variations are happening in the swings now, which need to be focused on, which deserves our attention as a price action traders. All right, so here the sellers are trying to enter the market, but the buyers are holding it. They are not able to give us the selling push. No, but here things are different now. They were able to give us the push, and it lost so many candles of gain. If you see, it took around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I don't know. I think if it's a 5-minute chart, then I don't remember what is the time frame here. But if it's a where is it? No, it's not. Hopefully it will be I think it's a 5-minute time frame charts anyway. So if it's a 5-minute time frame charts, then for example, we had lost 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 into 12, let's say 12 into 5. We lost around 60, 60 minutes. We lost 1 hour of gain in that one particular candle. Yeah. So that's a massive sell-off over here. Now, what does it mean to us? Does it mean the trend is over? The uptrend is finished? No, it doesn't mean that. It means there is a change of order flow happening in the market. So if you are trading the market the way you have been trading here, you're going to make a mistake. So when you see these things are happening, at that time, if you're going to trade the market the way you were trading the market when the market was smooth and momentum was the price was just rising higher and higher and higher smoothly, the price was breaking the previous high and breaking and flying above it, that kind of smoother market. If you're trading the market, if you're trading this market structure, this order flows with this mindset, then you're going to make mistake. If you're going to trade this market with this kind of volatility, when let's not talk about volatility right now, I'll come back to that. But if you now think to trade this sell-off momentum the way you traded this one, this is smooth momentum of the market, or maybe this is smooth momentum of the market, then again you are going to do a mistake over there, because now the order flow changed. So even though the uptrend remains same, but just because order flow changes, we need to think in differently now. We need to look for entries in a different way now. All right, this thing many people don't get it. So they are like, okay, we are going to buy a support, we are going to buy a flip support. So they just draw the key level and they just trade. They just look for some particular formations, they just trade. No, because till the time I'm not seeing the market in this context, then I don't have a real idea actually which strategy to apply and which weapon to use for that trade. Because sometimes even when you place the stop losses, so in such kind of a market, your stop loss should be wider. In such kind of a market, you don't need a wider stop loss. Why? Basic common sense. The market is not falling. It's not giving pullbacks. You don't have it's hardly giving you pullbacks basically. So when it's hardly giving you pullbacks, then you don't need a wider stop loss. You're getting it? So it's about, if you even have a strategy, good strategy, you apply it, and there should be a strategy for the stop loss as well. So the kind of stop loss you put in here will not be suitable to place the stop loss in here. And the people, the mistake they do, they place a stop loss here, it works well, here it works well, here it doesn't work well, and they change it. So the problem is not in that stop loss. The problem is that you're reading on the market structure. So if you would have read the market structure properly, then the way your stop loss, the way you place the stop loss will change. It will differ. All right, and the next point is the volatility. So what do you understand from this kind of market structure right now from the first push back down here? After so long bull momentum, you have the first push back down here. This looks like, okay, there is a seller, there is an entry of the sellers for the first time happening in the market. So few minutes back, what I talked about, volatility comes from the buyers and sellers both. Now that we see, okay, the sellers are now trying to push the market down, and they got some kind of success over here after this momentum, then we can expect a volatility coming in right now in the market. Market will be volatile now, and that's what we see. Eventually, it again struggle to break the high, and again selling pressure. So for the first time, actually, you can see good amount of sell-off candles, good amount of black candles, over here, which was not being seen over here as such. All right, but in terms of the trend, we are still long, we are still good, we are still trending up. Still the buyers are holding it, because how we understand the buyers are holding it, because this is the last higher low in terms of the structure. Higher low, higher low, it's building up, and till the time, as a basic structure, till the time we are not breaking to the previous higher low, then the structure remains strong so far. And this is the last higher low, yeah, and we are holding it. So that's a good entry on these support areas for a trade towards upside. But in terms of the entries, you need to understand the volatility to manage the trade, basically, as I talked a few minutes back in this. Now, if you have gone through the last two sessions, last two videos, maybe I'll put the link over here in the description. Or if you just go through the, I'll just show you. If you just go through the financialhubindia.com here. So basically what I did in here is that in YouTube, you can't get a structure basically. You can just create the playlist, but here you will get a structure in a section wise. So you can just come to this course, financialhubindia.com, and you can go to the trading course. And in the trading course, you will get a curriculum here, course curriculum. So in the curriculum section, you will get all the YouTube free videos, which are a part of the overall course actually. So the foundation lesson 1, 2, 3, So if you just click this, you can go ahead and see the videos over there. So once you finish this section 1, then you can go to the next section 1.1. This is analyzing charts with core price action. This one. So these are the things. Now here, I think the last two videos will be 11 and 12. 11, 12 will be the last two videos. So you can just check it out from here. So you will get the momentum of this video basically, because somehow this is connected to the last two videos. All right. So you can just click this and see the videos. But in future, hopefully it will not be the case, because in future you will be getting a login access as a free login here. So you'll get the login access. You'll have to click. It will be a login as guest. So you can just log in the course, and you can check out the course contents over there directly in the. There is a student section actually inside there, because in future there will be some tests and exams will be linked in this. So you cannot take those tests and exams directly from this page, and you'll have to log in this course to take those tests and exams as well in there. So anyhow, showing you the same thing. Where is it? Okay. Now, hopefully on the next video, I'll be focusing on this part. Let's see if I can cover here. That is, when you are following a 5-minute time frame charts, hopefully when you see a non-volatile kind of market structure, pretty easy to trade this kind of market structure over here. But since that you get a volatility, you can see the volatility is coming in the first time, the selling push after overall this market momentum. Then basically the trick is try to shift to higher time frames. Try to shift higher time frames, because if you're just following the 60-minute time frames, even I talked about it in the last two videos, that you need to know when to switch to the higher time frames. And if you don't know basically when to switch to a higher time frames when you're trading a 1 minute or 3 or 5 minute time frame charts, then you will be stuck in so many places, because again the context will change in 135. All right, and you don't understand the contextual changes, and you will be stuck. You will keep trading the same kind of trades what you have been trading in a non-volatile market. You are not trying to trade the market with the same kind of trading style, where you will be stocking. Now see, 60-minute time frame trades, this was really tough to trade 60-minute time frames. If I'm following 60-minute time frames from here, this is a very much non-volatile one-way momentum market. We don't have much swings. So even if you wish, you cannot trade the 60-minute time frames because you don't have swings. We need swings to open our trades. But for the first time, what we are saying, okay, you're getting some swings back in here. Now, when there is a swing in 60-minute time frames or daily time frames, you can see a swing, you can draw a swing. It means that's a big swing in a 5-minute time frames. So this swing, you can see it's a very much minor swing in a 60-minute time frames, but that's a pretty big swing in a 5-minute time frames. Non-volatile, pretty big swing. Right, and when you see this is the volatility now is attacking. When you're in 5-minute time frames, you're trading a non-volatile market, and suddenly you see the volatility is now attacking the market, and you need to get a clear view now in terms of that. The best idea, the safest idea is shift to lower time frames, shift to higher time frames, shift to higher time frame charts, and start trading the higher time frames charts in there. So there is a misconception. Hopefully, I'll cover this in another video. People think to trade the intraday, you cannot follow 60-minute time frames, but that's a wrong idea actually. To trade intraday, people think you'll have to use only 1 minute, 3 minute, 5-minute time frame charts. That's another wrong way to think about it, because to trade intraday, 60-minute charts can also be used, and that's a if you use 60-minute time frame charts, 60 minutes or daily time frame charts for intraday purpose, for intraday trading purpose, you'll be getting higher level of accuracy. And most of my trades, I prefer to open 80% of my trades are open based on the 6-minute time frame charts. And when 5 minutes and 3-minute time frames, when we need a better hunting, like when you don't have anything in 6-minute time frames, like here in 60-minute time frames, if I'm waiting for a trade in these areas, I don't have a trade, but there are so many trades in a 5-minute and 3-minute and 1-minute time frames. All right, so as a trader, you need to be flexible. Just because you like 60-minute and you practice your 6-minute time frames chart, it doesn't mean that you always. And then what happens? Then people say, okay, nothing is happening, no trades you are getting. So what to do? Because if you know price action, if you understand the price action order flows in any one time frames, let it be 1 minute or 60-minute, you can trade any other time frames. There is nothing noisy. There is nothing called noisy in the market. There's nothing called noisy in the market. Nothing. If you understand the price action correctly. So if you say, now some people may say, okay, 5-minute is noisy here, you can see this is a noisy market. No, you're not getting it. This is the transformation of the market, which you need to read it, and in line you'll have to trade it. It's nothing called noisy. Nothing happens illogically in price action trading. It's just that you are not reading the price action properly, and you are not flexible enough to shift the time frame, to shift the strategy, to shift the tool. You don't have different weapons. It means if you're saying it's noisy or something like that, it means you are just waiting for the market to buy or sell with a pin bar. That's it. You just open the chart and you're looking for a key level and a pin bar. That's it. That's not price action. Price action is based on the context. If the context is missing, then that pin bar key level is not going to work. That pin bar and key level is just that peak. That last pin bar is just one candle. And the context I'm talking about, those are the bunch of candles. So you need to understand the story first, and then you wait for a pin bar or whatever signals you're waiting for. Even though I don't prefer you trading with those kind of confirmation kind of trades, because it doesn't make any sense basically. Now, I think that's it from this. So here, what do we see is, so some kind of, even if you want to trade this in a 5-minute time frame, so in a 60-minute time frames, the kind of multi-time frame things you can do is this: the last higher low. Okay, that's a key support we have as shared on yesterday's chart. So that's a key support we have. Overall trend is fantastic. So we are still trending up. The only problem is the non-volatility is getting finished and volatility is coming in, and you can see the similar problems what we talked in 5-minute time frames, breaking the previous higher high and coming back down. It started happening here as well. So we can see, okay, the price, this was the first time the price attacked the market, and again when the price was breaking through the market, it faced the similar kind of selling pressure, which shows, okay, the sellers are now getting in the market. The sellers are getting in the market now. Till the time the order flow is not changing in terms of the higher lows, as well as the, we can see the buyers are still holding the support layers, and the fight is on. So here we can say that the fight is on between the buyers and sellers now. Between the buyers and sellers, the buyers are really, the move is really too much without any long corrective swing. So this won't be much surprising that, okay, we're going to see a long corrective swing from here. So you need to be aware if you're buying it, if you're buying it just because the market is good. You need to be aware when the order flow is really changing, and how the market sends you those signals, as we talked about the order flows things, selling pressure, holding the support areas. So keep an eye what's going on right over here. And if you're a buyers only market, if you're buying only trader in this market, then you need to be careful based on the stop losses and your trade entries. If you're a counter trend trader in the market, then you need to wait for the right momentum. The momentum is building up, but still it's not right for the counter trend trade. It's not, because the order flow in terms of the, because for the counter trend trade, we like to see the change of the order flow, and the overall order flow is still up in this. Okay, so what I was talking about, sorry, I just moved to something else. So 60-minute time frames. 6-minute time frame, support is holding. We should be moving up from here. The only problem is, okay, it's not sustaining above the support layer, so we'll not be targeting higher momentum as well. We'll be exiting around this line if you're in here. Yeah, so that was a buy, really. That was a buy based on a key layer over there. Now, if you want to use the 5-minute time frames over here, then we can see a trade over here, but that's not recommended. Actually, we see a trade over here. Okay, we have a resistance, and then goes up, holding the support. So for a intraday trade today, we can go for the trades over here as well. Now, why I'm saying this is not recommended as such, because of the, again, order flows, because of the order flows in here. Anyhow, we'll talk about those things sometimes later about this one. All right, that's it for today's session. Thank you.